And then, of course, it's just about when we do the analysis work, what do we see that they haven't seen or those that are guiding them haven't seen? And sometimes it's deductions that they don't even realize are there because they're in the code. They've been around for years, and you just have to structure your company appropriately to acquire them. And once those policies are in place, you can actually take these deductions that are very tax efficient.
The following is brought to you by Thrive, the end-to-end client experience platform that helps you get the job, manage the job, and get credit.
Hey, this is Gordon Henry at Winning on Main Street, the show devoted to small business success. And this week we get to meet Mark Myers. Welcome, Mark.
Thank you so much, Gordon. Great to be here.
Great to have you here. So brief intro on Mark. Mark is a leader in both the military and in business. He earned his stripes in the military as a sergeant and section leader in Bravo Company, 4th Marine Division, built his business acumen managing, operating, and opening high-end health clubs in New York and LA. And later, Mark shifted to financial services. He's the CEO of Peak Profit Solutions, where he helps business owners increase profit, reduce their annual tax bill, and accelerate wealth creation. So Mark, tell us about how you got into small business tax planning.
It's a great question, Gordon. And it really was a journey. You know, I started my career managing health clubs, as you just mentioned. I went to the University of Florida, had a good time there. I was an exercise physiology undergrad. I was a sports management master's student. And when I left to go to New York, I started working for this little company called Equinox. Well, they had about 11 or 12 clubs at that time. Now they have 100 plus. And they were really getting their name on the map. And I helped them open up a number of their locations. And in that process, I learned to be an owner operator, right? So even though I wasn't an owner operator, I was treated as one because each club was kind of an individual unit, right? How much EBITDA is this club going to produce? So in that process, I really felt like I knew how to drive revenue. I knew how to manage expenses. I knew how to increase EBITDA profit. And I spoke the language of a business owner. So after about a decade or so of working 365 days a year and many, many hours a day, and realizing that in this industry of health club management, you're only going to make it so far with regard to income, I decided to shift gears and say, hey, let me help who I know how to help, who are business owners, particularly looking to optimize their business and keep as much profit as possible. And that's where Peak Profit Solutions was born. And of course, me kind of going into this whole realm of understanding how to more efficiently handle taxes.
Yeah, great stuff. Okay, well, we're not going to do a podcast today on fitness and health clubs, but I got to tell you, I got 3 sons in their 20s. They're all pretty into fitness, but one in particular lives in New York and goes to the Equinox there. He is an addict. They're doing something right because he goes like twice a day. It's unbelievable. He loves the place. So they're doing something right.
For sure, they're a great brand.
Yeah. So I want to get into your whole presentation, your whole vision about taxes, particularly for small businesses, who is the folks who we're talking to. And you make some pretty interesting claims on your Peak Profit Solutions website. So you say, I help individuals reduce personal income tax by 30 to 60% without changing your CPA. I mean, I think we could spend a whole podcast on that one item. How do you help people reduce taxes by 30 to 60% without changing their CPA?
You know, that is a loaded question, Gordon. And we'll go into as deep as you'd like to go, but I think that just kind of giving you some good examples might be a good starting point. But really the key with that statement is I don't want business owners to think that working with someone other than their CPA is a bad thing, particularly if the person is not looking to take over their accounting and bookkeeping and tax preparation and filing. They're just looking at giving additional layers of efficiency. So that's why I always like to let business owners know, hey, it's okay to open the door, because you know why Nike and Duke Energy and Amazon and all these companies, the reason why they don't pay federal income tax, yet they have billions of dollars of profit, is because they have whole teams. They have business strategists, they have accounting teams, they have legal teams working for them. Whereas a business owner, as you know, a small to medium-sized business owner might only just have their CPA and a good financial advisor, which are both fantastic, but they don't spend time in the 70,000 pages of tax code and try to figure out how to utilize that tax code to their advantage as the bigger companies do. So that's really kind of where we go with that. Is you don't have to change out your CPA. Some business owners may do so because they realize that they're not getting what they want, but I never encourage that. And then, of course, it's just about when we do the analysis work, what do we see that they haven't seen or those that are guiding them haven't seen? And sometimes it's deductions that they don't even realize are there because they're in the code. They've been around for years, and you just have to structure your company appropriately to acquire them. And then once those policies are in place, you can actually take these deductions that are very tax efficient.
Wow. So another fascinating statement you make, you say you can reduce or eliminate long-term capital gains on the sale of appreciated assets, and that most individuals that sell highly appreciated assets do not know that they can significantly reduce or completely eliminate their capital gains tax if the sale is structured properly. Tell us about that.
Well, that has a lot to do, Gordon, with proactive planning. What triggers that taxable event in the tax code is assignment of income. So if you own the asset in your name or in the name of some entity that is taxable, then as soon as that contract is signed, the IRS is holding out their hand and saying, give me 20%, give me 23.8%, give me 37.1%. And if you're California, you're at the highest tax brackets. So you're looking at handing over, a quarter to maybe up to 40% of your gains to the tax man. So with that being said, it's important, especially if you're selling an asset, to structure prior, and maybe you can shift the assignment of income away from your name and into an entity that's more tax efficient. And those entities can actually, some of those entities can defer tax indefinitely. Some of those entities can efficiently eliminate tax because of the just navigating tax law. And ultimately, by the time it gets into the final structure, it's already paid for the tax that it owes. And it was a very minimal tax. And now it's in a structure that never pays tax again. So it's really unique. But it all has to be done preferably before a letter of intent, right? It doesn't have to be if they haven't executed and finalized the contract, that's good. But preferably before the letter of intent, because we don't want any assignment of income, even nuances, to make sure that we know that the sale of this business was coming from an entity that didn't have a taxable event.
Okay, really interesting. Similarly, you comment on your site, over 90% of America's successful small and medium-sized businesses significantly overpay in tax, even if they're working with a highly experienced CPA. So kind of the same question, but I mean, I just was struck that you think the number is essentially almost everybody is overpaying. And I guess it's the same point that you think that their CPAs are not carefully enough looking through the tax code and finding the areas where they can find deductions. Is that basically the message?
It is, Gordon. And listen, there's some phenomenal tax preparers out there and CPAs, and they do really good work. But again, they're not tax attorneys. They don't have time to spend time in the tax code. And a lot of them don't have the ability to be proactive with their clients. And I've found in my experience that 8 out of 10 business owners that I work with, their CPAs just ask them to give them information at the end of the year. And of course, when they say, hey, you did well, do you have any more expenses? Do you have anything you can buy? So they're saying, that's pretty much what they get. There's 2 out of the 10 that actually do quarterly meetings with them and proactively think of things. But even that 2 out of 10, they still only have so much bandwidth. That's when they need to plug into someone. I like to work with CPAs. I like to work with financial advisors because I'm giving them more bandwidth. So that's really where that's coming from. It's not that they're doing a bad job. It's just they're not exploring further.
So sticking with that point, you're right. I think that most of us, think of interacting with our accountant or a tax, advisor, sort of, oh, April's coming up. I got to start thinking about it, early in the year. You do this more regularly. You communicate with people more regularly, so it's something they're thinking about during the year and not just right before tax season.
Absolutely. If a lot of the solutions that we'll put in place, Gordon, if they can't save a dime in taxes until their structure is in place, meaning that maybe they need to change a portion of their entity. Maybe they needed an additional entity to support their current entity. A lot of the business owners I work with have pass-through entities. their sole props or their LLCs or LLPs or S corps, and whatever they earn, above their salary is just going to hit their 1040. So maybe there's a way to shift those income streams through other entities to get them to at lower tax dollars, and that needs to be done in advance.
It's interesting. You say you work with CPAs, tax advisors outside. Other people outside. They welcome you in. They don't find you a threat.
I'm laughing. So if you're watching on video, you can see me smiling and laughing. If you're on audio listening to this, you might not be able to pick it up, but they have their sword and shield out immediately, particularly because I'm getting introduced to them by their business owner in a lot of cases. Yeah. So now it's they don't want to look bad in front of their client, right? Right. So it's really important for me to have a conversation with them to just let them know, hey, I'm a friend. And I'm not doing it. I don't want to do anything that's going to put you on the spot. And I would never do that. But at the end of the day, I'm just, again, bringing in those additional resources. But I will tell you, in most cases, the CPA, not the advisor, the financial advisor is always looking, right? Hey, how can we find you some more money to put to your wealth preservation, your wealth accumulation? And if that means that you can save $30,000 a year in taxes, well, that's $30,000 more a year they have to help them with. But the CPAs are going to have that a little bit of a defense mechanism. Yeah. And of course, if they haven't heard of it, they might not think, they might have something negative to say or nothing positive to say, which could deter the business owner. So just remember, like I always say, well, if you've got a 3-inch tumor in your frontal lobe, and the neurologist and the neurosurgeon that's been doing this work, this specialty work for 20 plus years is going to need to do a specific surgery, and you're going back to your general practitioner and asking them if that surgery they're doing they know what they're talking about. That's what you're running into. Yeah.
You're the specialist.
Exactly.
Makes sense. Now, are you working with individuals as well as business owners? Because I noticed your site, you say many high income earning W-2 employees, so individuals, do not know they can reduce or eliminate their tax with special government approved programs. So are you helping individuals or high income individuals?
Yes. So business owners, there's a lot more opportunity because they control their income. We call it controlled income. If they want to take their income different ways, they can. Obviously, W-2 earners, their company dictates how they make their money. Their company gets the deductions. So when you run into an executive or someone that's just a high income earning sales producer in a company that gets W-2 plus bonuses, usually you think there's nothing you can do. But there's actually a couple of things that are really powerful for W-2 earners. And they have to do with, one, I'll give you some insight. One is I call it charitable giving made profitable. Most people like to give money to an organization that they have passion about. But usually when you give money to it, you give them $1. And maybe if you're in California and you're just crushing it, you're at a 53% tax bracket, right? So you've got a business partner in California that doesn't help you, but takes more than half your profits. Well, for every $1 you give that charitable organization, they get to keep the whole $1, but you get to save 53 cents in taxes. That seems like a pretty good deal for a charitable person. But let's just say you're not that you're not charitable, but you'd rather, profit. So what if you could acquire an asset and you're a W-2 income earner? You don't have to be a business owner. You could buy an asset for $1 and give it away literally within weeks of purchasing it. And you get a $4 deduction for that. Fair market value is $4. So you're actually buying something at a significant discount, and you can legally give it away because the tax precedent tax code says you can, and it's worth $4. So if think about this, if you're in California and you're at a 53% tax bracket, well, you bought something for $1, you gave it away and got a $4 deduction. That saves you $2 in taxes. So if you do your math right, I'll spend $1 every day to get $2 in tax savings. The question is always, how much can I do? And in these situations, there are limits, like 30% of your AGI. So we can only shave 30% off the top.
So I want to ask you about some of the profiles, or maybe one of the profiles on your website. You mentioned a guy called Patrick M. He's a real estate broker or something. He says, I decided to pass on working with Mark in 2016, but I became a client in 2020 and saved over 100K in taxes. I wish I'd moved forward earlier, as I would have had 300K more in my pocket today. Can you tell us what you did for Patrick M? Is that one that comes to mind?
Yeah, Patrick's great. I love Patrick. He actually is, he's moved on. He sold his business, did quite well. And lives in another country now. But he, his business was unique in that he spent a lot of money on marketing and internal processes. And we were able to do a lot with him. Usually with a business like Patrick's, like a mortgage, like a real estate business, there's usually not a lot you can do, even if they're very profitable. But because of his business metrics, we were able to do a lot of things. So one thing we did was we created a marketing consulting company for him. He was a pass-through entity. He had an S corp. We created a marketing and consulting company, and that marketing and consulting company was created for the sole purpose of supporting his S corp in the marketing and consulting activities. And it's legally viable for him to do that in a second entity, as long as it's structured appropriately. And now this entity is going to basically invoice his main company for marketing and consulting services. And it's going to do that for the value of those services. But the way we structured that entity, Gordon, there are about 20 different policies that are in the tax code that have been there for a long time. They're called tax-free fringe benefits, that when you have these policies in your entity, you can actually usurp the dollars as benefits that are not deemed taxable. So we were able to shift, I'd say around 100 grand or so, maybe a little more for Patrick, that he didn't know that was available. But when he had this new entity that was actually creating more efficiency for his business, he was shifting money from his main entity to this consulting company that was actually helping his business be more efficient in marketing and consulting. And there was dollars that could be taken from that entity in the tax-free form, because they were benefits. For example, what business owner doesn't work outside of regular business hours? All of them, right? So there's actually a stipend in the tax code that says you can actually pay yourself a stipend for working outside of business hours, and it's not taxable, and there's no receipt that needs to be shown. You just need to document it, right? Wow. These are things that are in the code. So and then of course, another thing, and I think you might have interest in this, which is one of the other solutions, was he was able to relocate some of his profit to an economic development zone. And that economic development zone had a 4% corporate tax rate. And the way that the tax code reads is all profit above the 4% economic development zone tax rate can be taken at a tax exempt dividend.
Wow.
So we were able to shift some of dollars into this economic development zone, not because we're just moving it, because we created an entity that would actually do additional services for his company. So this is what the big companies do. They don't have just one entity. They have maybe 3 or 4 entities that are all working together to essentially create more efficiency business-wise and more tax efficiency because of the way the code is written. So we just do that for the small, the medium-sized companies without having to have a 7-figure payroll for these groups to do it for you.
Big company strategies at small company prices.
That's exactly right.
Yeah, fascinating. That's great stuff. We're going to be right back. Just a 30-second break to hear a word from our sponsor, more from Mark.
Interested in learning more about startup investing or funding? The Startup Funding Espresso is a daily podcast delivered to your inbox every day, Monday through Friday. Written and recorded in a concise format you can read or listen to. In the time it takes to drink an espresso, you can learn about startup funding and investing. To subscribe, go to investorconnect.org and enter your email into the pop-up box.
We're back with Mark Myers of Peak Profit Solutions. Really fascinating discussion. This guy knows a lot about how you can save money on your taxes, whether you're a small business or even an individual, particularly high earning individual. Lots of interesting expertise here that could really be super practical, I think. A couple more questions for you. Do most of your clients work with you remotely, or do you actually get together with them? I noticed you're in Florida. Do you work with people all over who work with you kind of like we're talking via Zoom, or how does it work?
90% of my clients, Gordon, I'm working with them just like this. Of course, if there is a desire to get together in person, I will fly to them or we'll meet somewhere, but I do work with individuals in all 50 states. And, post 2020, it's a lot more acceptable to speak to people this way as opposed to in person. But I have no problem. And I love meeting clients in person. So whatever makes sense for them.
Yeah. How did you help your clients get through COVID? Was that something people came to you for advice or help, or just a shoulder to cry on? How do I get through this?
Well, one of the things that I think is very, very helpful is when you're paying less tax, even if your business is declining or experiencing some short-term trouble, it's much more likely that you can keep the business going because you have enough profit that you're keeping, that you're, lower tax bracket, that you can keep working at it. So I would say that in 2020, there was a lot of people that maybe they lost a lot of their revenue, which means they decreased their profit, but because they got to keep more of it, they stayed in business.
Yeah.
So that was really a blessing to be able to help people in that way, because some of them might have literally lost their business.
Yeah. Yeah. And, today, fast forwarding, we have all these new challenges: inflation, worker shortages, supply chain issues. How are you helping your small business clients differently than maybe you were a year or two ago?
That's a great question, Gordon. And when it comes to supply chain, it's tough. It's really challenging. I mean, I think the biggest and best thing that I can do is to look at their situation and be as proactive as possible, because if they're one or two steps ahead of the curve, they're likely going to be able to pivot and make a change that's going to course correct and help them not get them into trouble. So I think that's the best thing that I can do. Now, just note, most of my work is focused on how to reduce their taxes, but there are some elements of the business that can help increase profit. So for example, if I'm working with a physician that has a very successful practice, and they're doing a lot of write-offs, they have a whole lot of insurance write-offs for denied and rejected claims. I have groups that I work with that can go in there on a fully contingent basis and potentially cut their write-offs in half, right? So now that's 50% more money that they had on the write-offs that they would have never received, things like that. So we can always look at profit enhancing options in addition to, well, once you have more profit, how do you keep more of it and send less of it to the IRS legally? Of course.
Mark, your wealth of insights that I think could be really helpful to a lot of people who are probably listening and thinking, wow, I could really save some money, or maybe just make my business more efficient or more profitable, who probably would be interested in getting in touch with you. So first of all, what's the best way for them to get in touch with you? And can you give us an idea of, frankly, what's it going to cost? Sure.
Gordon, if they just go to peakprofitsolutions.com, which is my website, it really just has a number of links that just says, hey, click here and find an appointment. 20 minutes is all it takes for me to do an initial analysis, and that's no cost. So to talk for 20 minutes about your situation, you don't need to prepare. You don't need to come with all these numbers. Just call me or set an appointment. We'll talk for 20 minutes. I know within 15 or 20 minutes if there's opportunity. And from that conversation, Gordon, that's when we talk about what it will cost. Sometimes I have a retainer that I charge, which is minimal. Just because it might take me 10 hours or so to go through all the processes and due diligence with them to make the right decisions. And that time is valuable. And they might decide that they don't want to do anything, right? That happens. But, it may be that it's fairly simple. And I might have no retainer, and I can just share with them one or two things that they can do. And then when they move forward with them, that's generally how I'm compensated. They're going to be paying a advanced service provider that I work with. I have over a dozen different vendors that have been doing what they've been doing for years and years and years. And when I bring a client in and I'm consulting with that client as to how it will work, if they move forward with that group, then I get paid by that group. Kind of like when you work with a financial advisor. If they choose an annuity from Allianz or American Standard, well, then American Standard is going to pay that producer for referring that client into that product. So that's essentially how I work as well. But just know every single person that's paying for the service to reduce their tax is paying significantly less than the tax that they save in the very first year.
Okay. So it's a win. It's a win.
That's right. There's a good ROI in the very first year. And then of course, every year moving forward, because most of them are evergreen,
right?
They're just keeping more.
Yeah, great. Well, I hope some people will avail themselves of your website and get in touch to do that. So we're just about out of time. Before we go, I wanted to do a quick lightning round. This is the fun part of the conversation. You ready?
I'm ready.
Okay. All right. What is a favorite book?
Favorite book? Think and Grow Rich, Napoleon Hill.
Always good. Favorite movie?
Oh, Top Gun.
Yeah. Did you see the new one?
I haven't yet. I heard it's pretty good.
I'm dying to see it. Favorite hobby?
Exercise.
Okay. Any particular? You're a runner or weightlifter?
Strength training. I like
strength training.
Yes.
Okay. Cool. You're in Florida. You don't play golf?
I just moved to a place and we live on a golf course now. So I've got to get the clubs out. I haven't used them in 20 plus years, but I guess I will be soon.
Okay. All right. Pet peeve.
People talking over me.
Okay. Hope I didn't do that today.
No, you are great. And I try not to do the same because I can be my own worst enemy.
Okay. Last one. Ideal client.
They're paying tax on more than $250,000 of income.
Right. Okay.
The more, the better.
The more, the better. Right. All right. Well, great stuff. Mark, thanks for stopping by. Great to have you on the show. And I hope, again, some people will get in touch with you.
Thank you so much, Gordon. It's been a pleasure. I really appreciate you inviting me.
Sure. And for those out there, if you enjoyed this podcast, and I hope you did, please tell a friend or colleague to subscribe, and please leave us a 5-star review. It really helps us in the ratings of the podcast and allows other people to find us. We'd really appreciate it. Until next time, make it a great week.